Good morning, traders. It is October 12th, 10:15 EST. This is the last morning, the last day trading room open before Fibonacci Trading Bootcamp starts on Monday, October 16th. We have only 2 spaces in a bootcamp where you will learn how to identify these Fibonacci levels on any instrument, any platform you will choose to trade. Currently, this is a trade. This is a trade that you can witness instantly to the tick accuracy of the method. This is S&P sitting in excruciating pain at the end of the minor trend. However, once again, we are on the right side of the trend. How did that happen? Because Fibonacci said so. This is a chart that's been present in the trading room since last week. This is a level that's been respected by S&P last Thursday, Monday, Tuesday, when price started creating brand new historical high, as well as yesterday. This is a key level next. Exact same identical level, exact same identical strategy you will witness next on oil. This is institutional chart on oil that's been present in the room for the last few years. This is where bullish rally had started on oil at 27, at Fibonacci reversal zone, and struggling at the end of the minor trend since the end of 2016. And that remains constant. And that's what you're witnessing on S&P every day, when price continue crawling higher and higher and higher. Even in this, some of the worst day trading conditions ever, we are on the right side of the market. But we know that this is a level that's holding the key level identified by Fibonacci, proprietary method, proprietary levels, more than a week prior. So please pay attention next what price will do, which is exact same thing as S&P had done on your investment chart in 2016, when S&P collapsed from this hot pink line substantially in bearish correction, where buyers stepped in from on election night, once again with vengeance. Here we are. Institutional bias remains firmly bullish. I continue explaining and showing this to you daily. So let's do the math and let's see what happens if you play by the rules. As we discussed with you that this is very dangerous market, we are very close to overextended historical highs. So this is a trade on S&P. Depending on how you placed your trade, if you entered market order, which is something you should never ever do, or if you place stop limit order. 1 point on S&P, $50. 1 contract, $50. 10 contracts, $500. What if you work 10 hours per week and play by the rules, and even in this excruciating market conditions, you are on the right side of the market? All you have to do, add the lot size, not the number of trades. This is how you conquer instant gratification. And this is how you accomplish success as S&P continue moving higher. You can trade one lot. You can apply sniper's mentality. You understand that being on the right side of the market, trading with institutions is everything. You remain continuously profitable. As we discuss with students each and every day, institutions continue buying this market with vengeance. Institutional bias is bullish. Problem is, market exhausted. So this is a trade the students are in. This is a trade we discussed with students. Drastically different stops, drastically different targets. You don't need many points a week. What you do need is consistency and pain-free trading. And that's what you witness in the room each and every day. Moving the stop outside of break-even and respecting this as your key target is essential and crucial. 2 points on S&P, 1 lot, $100. 10 lots, $1,000. You remain consistently profitable. You play by the rules. You continue adding 1 lot size per month, working less than 10 hours per week. Can you do that? That's what you witness in the room. Room is open less than 10 hours per week. That's all there is. Walk away from the screen when market in pain. Respect the dangerous market conditions we're in. Continue trading with institutions. The sky's the limit. And that remains constant. What you choose to trade, absolutely up to you. You don't want to trade S&P, you want to trade WYNN. Why not? Exact same target. That's the reason why WYNN in pain. You prefer to trade Euro? Why not? Exact same formula. Euro at reversal zone, doing exact same thing as S&P. Price action remains the same. The only difference, risk management and trader psychology. Identical levels. No matter what you trade. Identical accuracy. Ladies and gentlemen, oil news is next. Let's take a look what to expect on oil. This is the chart that's been present in the room for the last few weeks. Just to remind you, prior 2 weeks we had incredibly bullish news on oil. Oil collapsed from reversal zone for 100 points here, for 200 points from here to here. This is where buyers stepped in with vengeance after oil collapsed despite very bullish news. This morning oil will be incredibly interesting. We're very close to institutional support. This is the levels on daily chart. This is institutional chart that's been present in front of you for years. This is where oil collapsed completely from, despite annual OPEC meeting. Russia, Iran and Saudis agreeing on production cuts. Oil collapsing thousands of points, from 56 all the way to 43. Ouch. And this is what we are dealing with this morning, this Fibonacci resistance. This is key Fibonacci support. You understand the value of these levels? You understand the accuracy of the method? All you have to do is identify what you want to trade. You never ever enter into reversal zone. This is where you're moving your stop outside of break-even and monitoring for reversal. That pure and that simple. So let's take a look on very clean chart on oil. As you could see, this is where oil collapsed from as oil reached reversal zone, and this is what this trade on S&P is doing. Identical thing. So let me show you what to expect on oil next. Oil news in few minutes. This is bearish trend exhaustion. Buyers here is firmly bullish. Watch this. We do not care if the news is bullish or the news is bearish. Oil currently at reversal zone at key Fibonacci support to the downside. This is the area, as you saw in the previous screenshot, this is institutional support. No matter what the news is, our bias is bullish. This will be key resistance to the upside, with hot pink line determining the end of the minor bullish trend to the upside. Oil news at any moment. Converting this chart to 1-minute chart, traders. So again, here's S&P reached Fibonacci reversal zone and doing exact same thing as Tesla had done. Identical strategy. Key Fibonacci support, hot pink level, key Fibonacci reversal zone. No surprise whatsoever. All the same. In the trading room, you're witnessing it on 1-minute chart. What you will choose to trade, absolutely up to you. No reason to wait for hours, days, weeks, and months. You see instantly the accuracy of the method that applies to any instrument, any time frame, can be traded on any platform. Traders from beginner to hedge fund trader trading the method. Moving the stop outside of decision point 2 is the key. Clear on that? Knowing where to place your trail, knowing where to place your order, knowing where to place your stop is everything. Never speculative, never abstract, always precise, always specific. Reversal zone not to be ignored. Reversal zone not to be entered into, especially when you're dealing with historical highs. However, as I said to you each and every day, institutions buying historical highs, institutions creating historical highs. Smartest thing you can do is buy with institutions. Trade continue moving in the right direction. So, what happens if you produce in 10 hours of work per week only 3 trades? Only a couple of points. Do the math. What's possible? 10 hours, 3 trades, on average 2 points? What is that? 6 points. 1 lot $300, 10 lots $3,000, 20 lots $6,000. Is that a bad way to make a living? All you have to do, pass the test of instant gratification. All you have to do is play by the rules. And that's all we will be doing in a boot camp. So please review all the information under Learn. And remember, this is the last Fibonacci trading bootcamp of the year. Everything is closed as of Monday. Only bootcamp room will be open. You are learning proprietary Fibonacci method, proprietary Fibonacci strategies in intense live market trading environment. You are mastering new range strategy that applies to any instrument, any time frame, any platform, and you are learning how to install, how to use Fibonacci tool on any time frame, any platform, any instrument you will choose. You will learn the chart you can use to trade maximum 10 minutes per hour or to spend maximum 10 hours per week in front of the screen. Doesn't matter if you're day trader, investor, position trader, option trader, stock trader, ETF trader, forex trader. All welcome in a bootcamp. For new students, bootcamp included in the course fee. This is bootcamp number 11 that graduates continue taking, paying additional fees, as it gives graduates opportunity to learn strategies that's not part of the course and master all they learn time and time again. Bootcamp part of 8-week group education course, 16-week private mentoring. All classes are live. Modules are supplemental. So please review the information on the website and listen to the students. Students from beginner to hedge fund trader in US and globally trading the method on any instrument they will choose. If you ever have any questions, please do not hesitate to contact me 925-257-4298 or info@fibinstitute.com. I look forward to seeing you in a bootcamp room on Monday at 9:15 EST. As S&P continue moving in the right direction, slowly but surely. So, ladies and gentlemen, once again, you're witnessing the accuracy of the method on S&P 1-minute chart. As I warned you 30 minutes ago, this is not the place to enter. This is reversal zone. This is where a knowledgeable trader taking profits off the table and moving the stop outside of break-even. That pure and that simple. What you will choose to trade after you learn the method, absolutely up to you. Choice is yours. Instantly you will see after one class that using anything other than price action and Fibonacci, silly thing to do. As every single thing that's ever been developed in the market based on price action, Fibonacci is the only natural predictive mathematical sequence that give you all these levels in advance. And that would be the only focus of a bootcamp. Nothing less, nothing more. So here we go, traders. S&P collapsed from reversal zone. As I was warning you, this is not the place to enter. This is a place to exit your trade. Oil news is next, where to the tick we will witness the accuracy of the method. Oil inventory minus 1.5 ME. Anything more negative is a bullish news. Anything more positive is a bearish news. Undersupply bullish, oversupply bearish. Oil news unlike any other news. So again, just a reminder, we were looking at this Fibonacci reversal zone. You saw these levels on S&P to the upside. Here's oil to the upside. Agree on that. On oil it's support, on S&P it was resistance. Again, this is hourly chart. I converted it to 1 minute. So to the tick you can witness the accuracy of the method. So ladies and gentlemen, is everybody clear on the accuracy of the method? Look at that, my goodness. We discussed that well before that happened. We discussed when price was here. Look at that. Oil news incredibly bullish. Twice under supply. And that's how you can benefit from the method. And that's what price does every time. Doesn't matter if you trade oil 1 minute chart. Doesn't matter if you trade oil weekly. Exact same formula. The only difference, this is your investment chart, this is your long-term decisions, this is your day trading chart. And that's what price does every time. No surprise where oil is struggling whatsoever. It's a Fibonacci resistance. And that's what price does. No matter what you trade. No matter if it's gold, where gold collapsed from at reversal zone 2016, now 2017. It's all the same formula. What you will choose to trade, absolutely up to you. And this is what you master in the course. These levels, these strategies that you can choose to apply to anything. Choice is yours. And that's the accuracy of the method I developed in 2008 and been teaching to traders from beginner to hedge fund trader in US and globally since 2011. I hope you enjoyed this morning. Trading room will be open one last hour until we will close completely for a bootcamp. So I would like to close by showing you how oil continue respecting this level, how oil continue respecting key Fibonacci support. And if you convert this chart to 1 minute, you see instantly how essential and crucial these levels are and how you can benefit from these levels in your trading, no matter what instrument you will choose to trade.